And welcome back. So tax season is here, and there are a lot of important changes to be mindful of. Joining us this morning to go through some of them is certified financial planner Jeff Massey with more on what you need to know before you file. All right, so let's go through some of the major changes that we're looking for when we're filing our taxes this year, Jeff.
Good morning, Danielle. Good to be here. So the important part of tax planning is to incorporate it with your other financial planning to reach your goals, whether it's for retirement or saving for a college fund, whatever that might be. The earlier you start planning, the better it will be. So some of the issues to look for this year, especially for low-income, mid-income families, is the child tax credit. Well, half of that was paid out last year. Now, they increased that credit from $3,000 to $3,600, depending on the child's age. Half of that $3,000 or $3,600 was paid out already last year in monthly payments. So when you file this year, you're really just filing for the second half of that tax credit. Another important thing to consider, the standard deduction has really been increased with the Tax Act of 2017. Now, for a single tax filer, the standard deduction is $12,550. For head of household, it's $18,800. For married filing jointly, it's now $25,100. According to the IRS, fewer than 11.4% of people actually itemize because those standard deductions are just so generous.
All right, Jeff, real quickly here, a lot of people certainly have been working from home over the last year or two. So let's talk about any write-off at-home expenses like office supplies, utilities, when they're filing their taxes. If you could briefly go through that for us.
That is more for those folks that are working from home as part of their job, like their business, if you will, as opposed to an employee that's working from home. You may be able to get some reimbursement from your employer, but you may not be able to take those deductions as it's typically set up for those folks that are self-employed working from home, and they dedicate their home space to that business.
All right, Jeff, a lot to go through. We're going to be actually checking with you later this morning to go through some of the things to be aware of as we're really in crunch time here with just about a month to go before we get to file those taxes. All right, Jeff, thank you so much for joining us this morning.
Always a pleasure, Danielle. Thank you.
We appreciate it. Well, get ready for another long wait for your tax refund this year. Officials from the Department of the Treasury have warned this could be another, quote, frustrating season for tax filers. Certified financial planner Jeff Massey is joining us now with more. So, Jeff, why are we anticipating slower refunds again this year?
Well, a challenge that the IRS has. They have 35 million unprocessed returns at the end of last year, and they still have about 20 million yet to process for last year. They were very busy with the stimulus payments last year, so I think that and the payment of the monthly child tax credits kind of kept them busy, and a lot of people left the workforce due to the pandemic. So you wrap that all up and it's a big issue. The IRS is actually trying to hire 10,000 people, 5,000 near term, 5,000 over the next 12 months.
Wow. All right. So how can we avoid, if we can, delays in getting refunds if you're getting one?
Well, there are simple things that you can do. Electronic filing is so important to do, and double check your return before you hit that submit button, just to make sure that everything is in where it belongs, to avoid a manual review. If you have a manual review, that's going to delay your return. And also direct deposit. So the electronic filing, direct deposit, best way to do it. And the IRS says if you do that and everything is in order, you should get your refund in 3 or 4 weeks.
All right, so the best way to avoid waiting for your tax refund may be to avoid needing one altogether. So let's talk about some good financial strategies before we let you go.
Real simple. The average return is about $2,800. That's about $233 a month. So why not just adjust your W-4 with your employer to withhold a little bit less so that you're getting that increase of income right now? And let's face it, with inflation, gas prices, food prices, that'll help a lot of folks. And it's just a better way to do it. Don't give the government an interest-free loan on your money.
Yeah, you mentioned a couple of things. So some of the better ways to use the money, as you mentioned, is to get it throughout the year. Do you think you'll see more people shifting to that? And it's pretty easy to do, right?
It's real easy. Just simply file a W-4 with your employer, and then what can you do with that money? Well, pay down debt, The average American has $5,500 of credit card debt at an average of 16% interest. Pay that down. Save for the future. We always recommend you should be saving 10 to 15% of your gross earnings per year for your retirement. And of course, build an emergency fund. It is so important. The pandemic showed us we need money in the bank to get us through those tough times.
Absolutely. Great advice as always. Jeff Massey, thanks so much for joining us. We appreciate it.
Danielle, always a pleasure.
Take care.